If you like our content, please subscribe and like to support our channel. If you're interested in becoming a premium member, we want to offer you 30% off. Simply click the 30% button you see on the screen and type YouTube, one word, in the coupon code box. Hello traders, Gary Wagner here. It is approximately 10:30 in Honolulu, 4:30 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 8th day of August, 2025, and this is the evening report for gold and silver, our weekend review. After a 2-week vacation, I am back and glad to be back. We are witnessing one of the most volatile times we have seen in quite some time in regards to gold pricing. Gains in gold year to date and gains in gold this month, although it is only the 8th day of August, have been significant. The incredibly strong gains are mostly the result of the uncertainty factor of this new administration, the implementation of tariffs that have just begun to kick in, and the lack of clarity on the specifics, especially as they apply to gold bullion. Today, gold prices traded to an intraday high of $3,534.10, matching the opening price on the 16th of June, just around the opening price of May the 7th, and just shy of the all-time record intraday high that occurred on the 22nd of April. However, because of uncertainty and a lack of clarity or misinformation regarding gold tariffs coming from Switzerland, that news sent gold prices tumbling, and by the end of the session today, August gold closed lower by $24.50. That's a net decline of 0.70%, taking a troy ounce to $3,458.20. However, when we look at what occurred this week in gold, we can see that gold gained $42.20 or 1.24%. And in terms of the month, although we are only in the first week of the month, gold has gained $115.90 or 3.47%. Earlier gains in gold, as well as the lower close today, occurred with nominal dollar strength. The dollar gained 0.18%, taking the index to 98.294. Silver did decline, but only fractionally, giving up 2 cents on the day, with the most active futures contract currently fixed at $38.51, which is above the entry price of the long position we recommended. More on that when Joseph discusses his outlook on silver. First, just to recap my long-term view on gold and my current outlook, as well as my Elliott Wave count, it is under the assumption that we completed a full motive phase during the last week of April 21st, with a wave 1, 3, and 5, our motive waves moving in the prevalent trend direction, and waves 2 and 4 are corrective waves. At that point, we entered a defined correction. We typically look to see an ABC correction. However, in the case of gold recently, we noted that it was really a compression triangle with a series of higher lows and almost a flat top. The only thing that made it a symmetrical triangle was this extended intraday high that occurred on the 22nd day of April. Because of that, we can make a case for a full 5-wave count, A, B, C, D, and E, of which we have completed that correction, which means that this current rally that began on the 30th of July should be what is called our thrust. Our thrust is typically a move in the prevalent trend direction, ending the correction and restarting the motive phase or a brand new 5 count, in which this would be the beginning of our first wave. Of course, for that model to be correct, we need to wait till next week and see if the trend that began on the 30th day of July, taking gold from $3,324 up to this recent high at $35.35 today, will continue, first with a closing price above the upper level resistance line, making that the current support line, and, as I said, restarting the clock with the next motive phase, waves 1 through 5. And traders, of course, that's where we will pick up our current discussion on Monday.
Silver's strong gains this week of $1.40, 3.79%, brought it back above a critical level that is now acting as support. The level I'm speaking about is this upper dashed line that is drawn in at approximately $37.75. This price point has historical significance, but is also significant when we look at some fib levels off of the base that formed recently around $35.50 to the recent high at just under $40. You can see that $37.75 roughly matches up with the 50% retracement. Another thing that is very bullish and evident on this daily chart is silver's reaction to its 50-day simple moving average. Last week, on Friday, it opened just at that average, and since then has moved off of it, making a higher high on the last 7 trading sessions. And 6 of those 7 trading sessions are also green candles. Earlier this week, we entered long positions in silver at approximately 38.28 in futures and approximately 38.09 in the spot markets. In our futures trade, we recommended placing protective stops at 37.69, and that is where this red line is drawn in at. As you can see, we placed it just below what we consider to be new support. Today's indecisive action does not change my conviction that silver is still in a bullish mode.
This has been Gary Wagner
And Joseph Wagner.
wishing you, as always, good trading.
We'll talk to you on Monday for our next video report.
Bye-bye.